What is going on, everybody? Another Tuesday, another Unusual Whales flow stream and options concepts. Today's going to be a little bit of a different one. We're going to be doing a little special Dan sequence today due to some questions that hit the Discord. Então, de nada. O português é sem prático. Há muitos anos desde eu praticar. Pratiquei. So the only thing I'm really going to lead off with before we spin to Dan for the complicated stuff is I had a couple of trades that hit the tape today that kind of raised my eyebrow a little bit. The first one was this PRCT guy, the $72.5 put expiring on 9/20. This one raised my eyebrow a little bit because at around just before the lunch hour ended, New York time, Chicago time, 11:36 a.m. I saw a nice little series of order, nothing crazy, nothing extravagant, nothing out of this world. It was just 137 contracts that hit the tape, all of them at ask side, pretty much right at the ask. There were a couple that had a bit of a wonky fill, but they had a pretty wide bid ask. $1.30 to $1.55 for most of it. Give me 1 second. I'm going to shut my window. We have a very loud car guy across the road, and he just fired that bad boy up. And we're back. So the 72.5s for 9/20. Bid-ask spread of 130 to 155, and these were all filling right at 155. At the end of those orders, we saw that bid-ask widen to 130 and 175, and these continued filling at 155. I'm not too concerned about that because if you look at the timestamp, they're all identical. This is a factor of the bid-ask shifting in real time and the spots still just filling at their initial order price. Nothing crazy going on there. I'd have a little bit more pause if the order started out that way with that much wider bid-ask spread and these 155s falling closer to the middle. But since the whole order was filling at that 155 beginning to end, not at all concerned about it being closer to the mid after that bid-ask shift. What made it more interesting was literally an hour later. So like I said, this one, only 137 contracts transacted. An hour later, we got a good old-fashioned 1,400 contract follow-up on the same contract. And this one is extra interesting as well because, again, they're filling right at the ask of 170 per contract. And in that same split second, not even split second, 1/100th of a second, the bid-ask spread shifted again to 145 and $2. And these orders continued at that timestamp, just sweeping at the best price they could get it, which was at the ask of $2. So when that bid-ask spread widened, these continued filling right at the ask. So to me, that says, in all likelihood, much more likely than not, these are being bought to open. And let's see where they ended the day, actually. 228, they hit a high of 230. Yeah, they were only up about, what did I say? Let me hit my Twitter real quick. Because when I found the second set of orders, they were already decently in profit. Yeah, they were already up to that high of day right when I tweeted it. And so I want to see what happens going into tomorrow. I didn't see any evidence at all that these got closed. Everything's ask side on the day. There wasn't a big enough spike of volume going into the close to indicate the position isn't there. And so I expect that open interest to go up by about 2,000 tomorrow. But we'll see. So that's the first one I was looking at, the PRCT. Now, the second one that I saw that I was interested in was this AIG. We were already following an AIG trader, and this is good because there was volume after I tweeted it out this morning. This person had entered for a price of $55 per contract on the $78 call for 9/20. If you recall, we were formerly tracking the $75 call for 9/20. We marked their exit already back on August 23rd. This bad boy opened up just on the 30th, and it looks like they might have already gotten out. We'll see tomorrow, but they entered for 55 per contract on the 30th, and they hit a high of 84 per contract since then. But if you're looking at the volume profile up here, there's a bunch of bid side transactions, one for 1,000, one for 400, another one for 600, for a total volume on the day of 2,700. It seems fairly likely that the trade I was just going to talk about is already over. It seems pretty likely they're gone. If you can see that these are all on the bid, these big red bars, and in the flow itself, pretty convincingly so, right? We've got a bid-ask spread of 60 to 70. These are all filling, same timestamp, rapid fire at 60. The only thing that would surprise me tomorrow is if this volume carries over into open interest at these perfect bid fills. I would almost speculate there's somebody on the opposite side of the trade that was opened on the 30th, completely unrelated to the guy on the 30th. But my expectation, based on how much open interest carried over from the 30th to today, and the volume that we had transact today being damn near equal to that open interest, I think it's more likely we're seeing this person take their trade off yet again. And I mean, for profit, kind of, but they could have had more. It looks like these were filling at an average of 60, which is still profit for that trader if they did take them out then. And one other that I saw is actually a bid side flow. I'm not usually someone who's watching a ton of contract writers because I personally don't short contracts very often. By very often, I mean never. If I'm short a contract, it's in one of those spreads that Dan teaches me about. But we had a good thick bar of bid side flow on the VFC, $22.5 call expiring in November. Now, when this order came in, VFC was already up, I think, 3.5% on the day, and it looks like that's roughly where they closed as well, at about 3.38%. And they have plenty of time on this. I have no inclination that these are being bought to open. The bid ask 63, 64, 63, 68 doesn't matter. They're all filling right at that bid at 63. It seems pretty likely to me that these positions were shorted. Now, looking at this volume bar, all of that came in this afternoon. When I tweeted this one was right when it came in. I happened to open up my interval flow filter and it was there waiting for me the instant I clicked it. So at 3:05 p.m. Eastern Time, 2:05 Central Time, we saw almost 3,000 of these contracts transact, all very much at the bid. No volume followed it, none at all. So I think we can be fairly confident that we'll see that open interest climb by at least the amount of that initial order, which was 2,700 contracts. There's no volume transacted at all after that. So there's no reason for me to believe that open interest won't rise and we'll see this position open and stay open. And I wanted to point that one out because it is a pretty clear example of bid side activity potentially shorting. And it was an eyebrow raiser for me because VFC is another one I don't really know anything about. And their flow net premiums, let me spit this to 7-day, has kind of been reflecting a baseline on puts day after day for weeks. But the calls have been pretty sporadic. They've either jumped straight up to the sky or dumped dramatically the next day. Today they had both. They had a big spike in net call premiums right before this transaction happened, and then a big dump with this transaction. And this wasn't kicked out as any multi-leg trade at all, but it did make me a little curious why we had that spike before the drop. And this $20 call here for 11/15, another November contract, had a ton of premium dropped on it today. But relative to its open interest, not a lot. This one had 8,000 volume. Most of it on that initial order was at the ask, and at the end of the day, we had some bid side activity as well. Given that open interest, I don't really know where that's going to go. And if we look historically through the bid and ask fills of the days prior, it's still kind of hard to see the initial opening of the majority of that open interest. On August 16th, we had 10,000 transact at the ask. Today could be an addition to that. It could be a lucky fill closure of that. With that much open interest, I'm not sure. But Those 22.5s, I'm leaning pretty heavily toward them being shorted to open. And as
What's
far as, go
what
ahead.
was this? What's like the underlying? What is VFC trade? What was it trading around?
It
Like, is
was
that
trading at 1881 when the 22.5s filled.
okay? So
So they're out of
all
the
right.
money.
Well, so they were was that that was put side trades?
Calls. 22.5
Oh,
calls. Yep.
okay. All right. They're selling those. Okay.
They were selling into the rip, it looked like.
Yeah. Yeah. Got it.
And they got a hell
Got
of a
it.
lot of time. So maybe they're just, maybe, what's the seasonality for September again, right? It's September's more of a down month historically, I think. Let me go to seasonality here.
Yeah. Last 5 years for the S&P 500 September been tough. Been
Yeah, look at
tough to be
that.
long.
5 of 5 years, very red in September. You're right. So maybe they're just banking on that. I mean, that said, today was a pretty hefty market-wide pullback. I think the Qs closed today at like -3 something. VFC was pretty green on the day, despite that. So maybe they're hedging shares. Who knows? And again, like Dan always says, unless you're the person who made the trade, you don't know for sure. Close some of these windows here. That's all I had for the trades that I'm following. I'll definitely follow up on those. Before we get to Dan's presentation for the week, I know some of you guys have been badgering me about having Milt on again. We're going to have him on next week. Dan's going to go party it up in Cabo or something next Tuesday. And so we will have Milt filling in for some flow and charts and all around shenanigans, old school style. But with all that said, Dan, what have you got for the homies today?
Okay. So today, couple I want to try and accomplish or I want to try and tackle two questions today because um they are like one can hopefully be solved from the other, but the first question that has come in a few times since we last spoke on Tuesday is how to how to ingest, how to review the data from the daily unusual whales option data files that are available to annual and lifetime customers. And I fully understand why someone might be asking this question. Those files, they're big. They are like potentially multiple gigabytes in size, and there are a lot of rows. There could easily be 4, 5, 6 million rows on a given day, and that number of rows is just too big for your standard Windows Excel kind of like open it up and go. So what I want to talk about today is how you can how to deal with that, right? Like if you're a Windows user, and we'll have a full presentation on how to do this with other operating systems as well. But fortunately, it's going to be very similar. But the goal here, the first thing I want to tackle is how to like whittle down the daily CSV files that you can get that contain all the option trades for the day. How to whittle that down so you can open it up in something like Excel. And then as a follow up, someone asked this earlier today in the Unusual Whales chat. It looks like there was a big step up in call premium during the day inside IWM. So we saw the net call premium just kind of like step right up from somewhere here in the negatives, maybe like minus 1 million or minus 2 million, all the way up to plus 6 million in what was likely one single minute. So there was some big trade somewhere. And so what we're going to do is I'm going to filter down today's data file, and I'm going to see if just using like pretty basic Excel stuff, if I can find out where like what transaction caused this. Now, obviously, you can just use the fantastic Unusual Whale software to go rooting around and go find it. I'm pretty sure Snorlax did answer the question in the chat, just because he's a great guy and everything like that. But as to make this practical, instead of just making it a video about how to download files and run scripts on top of them, we'll try to answer a real question, and we'll take a look at this, and hopefully we'll be able to kill two birds with one stone.
And like you
And
said, we'll do a full blown primer on this in a couple of ways. The first way is going to be your general kind of, I don't want to say generic, but your run of the mill walkthroughs, very straightforward, very fast. And then the other way we're going to do it might be a little bit more fun for you guys, because Dan is going to throw me to the wolves as someone with no coding experience, no Python experience. The only data manipulation experience I have is search query language, and even then it's so minute, I might as well be a toddler. And so you'll get to see me struggle along with it as a completely new user, and I think that should be pretty helpful for learning something new like that as well.
yeah, absolutely. Right. So we'll work through some walkthroughs together, right? We'll take you to data school. We'll get you, we'll really go through the basics. We'll make sure you install some software to help you analyze this information, get these like command line tools, get Python if that's if that's of interest to you, and we can work through some of those steps, and we'll get to it here. So today's one is just going to be like a light version. You're going to see me move through it. I might display a little bit of what's called, I think it's called the expert fallacy, because I have had to do this lots of times. So in my mind, it's very easy, but to someone who's new, it's not so easy. So I'm open to questions. I'm happy to stop and talk about the way to kind of like conduct this, the how and the what that I'm doing. I'm happy to stop and talk about it. And of course, like actually sharing these commands, right? Don't feel obliged to like try to write any of this stuff down. We can paste it as like a comment or something like that. It'll be real easy to find these. So don't feel like you need to hurry up and write anything down. So unless there's anything before we start, I'm gonna really actually start from scratch, like I kind of promised, right? I don't want to skip any steps and make this take any like cheat codes, right? Like I want to kind of just do this all the way. So I'm going to, first things first, right? I'm logged in. I'm on my downloads page, right? Today's options flow feed data is available. So I'm gonna click download, and I'm gonna download it, right? I know it's gonna go to my downloads folder. I'm using Windows, and that's where this stuff ends up. And so you could see right here, this is the resultant file that I just downloaded. And so it's a zip file. So I'm not gonna, nothing too crazy with this, right? I'm just gonna like right click, extract. There's like a handy built-in Windows tool that'll do this. I'm pretty sure these tools exist on the Mac as well. So you can like right click and extract something. Doing something like this should be pretty easy. So now I'm just gonna wait. You can see as the clock is going down and it's telling you about the extraction that's taking place. You can tell that like the file is going to be pretty big, right? And that's going to be the issue with trying to open this file in Excel. So we can see this is I know there's something unique about kilobyte, megabyte math and all that good stuff, but this is about 2 gigabytes in size. And so that's probably going to be too big to open up in Excel, but I'm just gonna confirm it. And the way I'm gonna confirm that is I'm gonna use like a text editor program to open it up instead of trying to open it in Excel, because it'll probably crash Excel, and I don't want you guys to just sit here on the line while I crash Excel and have to try and recover from that. But
I think seeing all those digits in one text file like crash my.
Yeah, I know. We'll send you to the matrix here. You're gonna love it. Okay, yeah, cool. So I just scrolled all the way down. This edit pad is good for this type of thing, because it'll open the file and then it'll like stream it. You know, it won't necessarily try to open the whole thing in one shot. It'll just stream it so I can scroll down. But you can see it has this row counter in the left, and there are, what is that? That's like 6.6 million. It has like 6.6 million rows, which is just, I mean, it's just too many. Excel can open up a million. And if you're trying to do something in Google Sheets, you're going to face it. You're going to face a similar limitation, if not a smaller, like a smaller row limit there. So this is a problem, right? If you want to dive in, you want to do some analysis, but there's a giant file and you can't open in Excel. What are you going to do, right? Like how do you do something with this file? Well, fortunately, there are some tools that are out there, and we can take advantage of them. When we do this write up, the write up will tell you there's a nice bundling of these tools together with something that's called Git for Windows, and it installs everything all in one shot, which is really nice. I already have that installed, and it would be very painful for me to try to uninstall that today. So you're just going to have to take me, you're just going to have to take me at my word that you can install these tools for Windows. But next thing, try not to be intimidated by like using a text editor by using the command line. I promise it won't be too scary, but we are going to need to use some tools from the command line to unlock the information out of this file that we actually want to get, right? So I know that this CSV file is sitting inside my downloads folder. So what I'm going to do here is I'm going to go navigate to that folder, and then it's in the downloads folder, and then it's in BOT end of day. All right, so I'm going to navigate to end of day 2024 903. Yeah, I think that's what it is.
AI Gone Wrong says hot damn CSV 101. Pretty close, dude.
Yeah, that's right. Yeah, we're absolutely in a CSV education land here. Okay, cool. So here's our file, right? Here's this big old file. We need to process it, and you'll recall that our guy, that Mr. Tommy XD, IWM King, wants to know what IWM trade went off in here. So it stands to reason that instead of looking at every option trade that took place today, we could probably just look at IWM, right? Like I don't need all the SPX trades, all the Tesla, Nvidia, all that other stuff. I don't really care. I just want to answer, or I just want to figure out, hey, what's going on in IWM. So what I'll do, and is I'm going to jump right back to my screen here. And so here we're going to use some of these tools that are built out, these tools that you get with this Git package, all these great open source tools that are they're already installed on a Mac and on a Linux machine too, if you happen to be using a Linux machine. But you download them and install them all in one shot with this Git package. So the first thing I need to do is I'm gonna cat this file, which is gonna stream it to the screen. But I don't want to stream it to the screen because I don't want to just watch 6 million things go by. So I'm going to use this pipe operator to send it to another program, which is called grep. Again, don't worry, the lecture or the write-up for this is all going to very much detail this stuff out with easy to copy paste stuff, so you're not trying to hand write it down or what have you. But we're going to run grep on this thing, and then what we're going to do is we're gonna look for one of two things. So the first thing I want to keep is any row that has the word executed add in it, because I know that's that's like the header row. And I want to keep, I want to know what the names of the columns are. And then the other thing I want to keep is any row that has the text IWM in it. Okay. And then the last thing we're going to do is going to send this to a CSV file, or we're going to send it to any file, and we're just going to call that file IWM only.csv. And so we will then, we're going to hit enter and run the script, and it'll run. It's actually pretty quick, which is great because no one wants to be sitting around staring at their screen for a long time. And now if you take a look, our IWM only file has been created, and you'll notice you can see in the size right here, it's like way smaller, right? 32, maybe this is like 32 megabytes, I think. And I'm going to go ahead, I'm going to open it in that same text editor, and I could see, okay, great. I have all my headers. I have lots of trades, and now instead of it being tons and tons of different options that traded, now it's all now everything says IWM. And so if I were to scroll all the way down to the bottom at IWM, wow, this is just so much smaller, right? This is only 117,000 rows. So now, because this file is so much smaller, now we can open it up in Excel, and we can see if we can answer that question that came up as well here. So I'm just going to double click on this. Excel by default is going to open up CSVs on my computer. And okay, all right. So this file actually opened up. We said there were 117,000 rows. That's great. We see 117,000, which is nice. This is excellent. So now what we want to do is we want to answer that question. And so we saw a huge spike in call premium on IWM during the day today, and we want to figure out what option contract that actually came from. And so when you're looking for like a huge spike in premium, it stands to reason that you probably want to look at the data that's in the premium column here. So what I'm going to do is I'm going to use something called a pivot table, and there are better ways to set this up that I will write about. I promise. We'll use like a dynamic range, but I don't want to subjugate you guys to watching me write formulas in Excel. This is already boring enough. So right, yeah, exactly, yeah. And so, all right, cool. So now, okay, so now what do we have? We have like our little pivot table here, and the thing that we probably want to look at is like we want to look at like a sum of all the premium that traded. We know it was a call, I think. Yeah, here, net call premium. Okay. So the net call premium spiked up today. So what I want to do is I just want to look at all the call strikes, and I want to see like if I could figure out, okay, which strike was it? And then once I know what strike it is, then I'll be like, all right, show me all the dates. And then I'll have it, hopefully I'll have it sorted out. Hopefully I might end up looking like a dingbat thinking I could solve it this way, but let's go ahead and let's just see right now. That all that being said, we have all these strikes here, but I'm only interested in calls. So I know that this thing was called option type. And here, I'm going to zoom in a little bit to make this hopefully a little easier to read. And so I want to take my option type, and I actually want to filter option type. I just only want to look at calls. Okay, great. So now I've got my premium by strike summed up right here. And I have all my strikes visible, and I'm going to just go ahead and freeze this so I can scroll up and down with these. And so this is just me, probably one of my deficiencies. It's like really hard for me to, I like need the separators. I don't know about you guys. Maybe it's just me. I just can't tell how big something is without the
I
separators.
need those commas too, man.
Yeah, I know,
I,
me too.
my brain just looks at it as one big line unless there's separation, and I'm just like
Yeah,
600 that 60 mil 600 million.
yeah. I'm right there. I'm right there with you, fams. Although I got to tell you, because we have so many wonderful European colleagues, though the the role of the comma and the decimal point are flipped between the states and Europe. So I have to like be really careful when I'm putting this information in. And what I found myself doing a lot of the time is just writing like if I want to say 20 million, I just put underscores there.
Hey,
So
everybody's happy. No comma,
yeah,
no dot.
exactly. Yeah, it's
Brilliant.
obvious what I'm trying to convey. Okay, and I don't want to get into a periods versus commas
Look, it's not our
sort
fault
of
if
thing.
they don't use freedom units. I,
That's yeah. Just see, my man gets it. I speak only in hot dogs and hamburgers and American freedom units for sure here. Okay, cool. So now what I want to do, I want to sum this thing by like the premium, like the biggest premium trades, and I just want to take a look at like the big ones, and see if one of these is going to be my, is going to be the place where I can go find this where I can go find this trade, right? So there are only a handful that were above 10 million, and there were three of them that were like pretty, that were pretty big, right? Like three, three strikes that I kind of want to that I have narrowed this down into, right? So it's the 219, the 220, and the 195. So now what I'm going to do, I want to, let's see here. So now, all right, here, I'm going to, so it's a 195, 219, and 220. So what I want to do is look at expirations. Oh yeah, this date stuff. Hang on. Ungroup. So now I want to look for big days here. And actually, oh, you know what? Here, check this out. Okay. So what I just did is I took the strike and I dropped strike underneath expiry. And so what I'm going to do now, if memory serves, it was a 195, the 219, and the 220. 219 is very interesting choice. Not a round number, but hey, what are you going to do? And so now, okay, here we go. This looks like it's going to be contender. This is contender number one. It's 14.27 or 14.2 million for the September OPEX 195 call in IWM. So that one's at the top of the list, followed closely by this old boy right here, the 219 for the December OPEX, and the 220. The fact that so much traded on the 220, it just must be that there's like a lot of 220 action trading across lots of these, like there's just a 220 in almost every one of these, and it was getting some action throughout the day, which I guess makes sense. It's like a nice round number, and um, that's just kind of an artifact that would have had me tricked if I wasn't able to do this real quick. So so then the last thing, right? I'm going to like just then take a so then I guess like the last step here is just to go look at the September 195 and the December 219 inside the inside the actual software, because that's going to do a nice like a nice visualization of what we're trying to look at. And I have these all just like I just have these handy because I use this like right away. And first one is our, let's see, go out to 50. Yeah, okay.
So I actually might have a bit of a theory on those 195s that might throw a crutch into how dramatic of an effect it had on net call premium.
Yeah, go ahead, please.
So look at the volume from 830 and the volume today. Down at the bottom in historical volume OI.
Yeah,
They're identical in size. Now,
yeah,
if you click on that volume bar from 830, it's going to take you to some pretty convincingly ask side flow, right? There's nothing in there that's not at the ask. There's two things here, but I don't want to get caught up in one of them, which is what you're about to click.
yeah. I won't though. I won't, big dog. Go ahead.
Now, if you
Explain.
pop back open now click on today's bar, the one that caused today's spike. Set your results per page to 250.
Yeah.
And then scroll down to the bottom. See how they're all at the same timestamp as the ask? When I see this happen with that bid ask shift, especially on these bigger contracts, if everything's filling at the same time, relatively same spot price, but that bid ask is shifting, I tend to err on the side of the first orders that came in that sequence of orders. I think, and we won't know until tomorrow, open interest update, I think yesterday's 6,000 contracts closed today.
Yeah, I certainly I wouldn't argue with that, right? This is someone trying to put, some size on. Uh, you can see that most of it held into the next day.
Yeah.
And then IWM gets like kind of has a not so good trading day, right? I could understand someone I could understand like a trader or desk deciding, hey, we already took like, what is this, like 15%, 20% down, like somewhere between 15 and 20%. They already took that. They took that loss. And the thing about buying in the money calls is it's great when you're right, and you're right now, because you have all those deltas, right? Like that, if you're correct on directional price, then you are getting levered long exposure to the underlying with this short dated expiry as well. You're just getting a ton of long deltas in IWM. The the flip side of that is when you're buying in the money calls and you like, it turns out maybe you were less right than you initially thought. You're riding that gamma ramp the wrong way. You know what I mean? Like gamma option break. This picture should probably be my background, to be honest, on my desktop, but okay, this thing right here. So when you're like
Go
this
ahead and
stock,
right click that and click open in new
yeah, you got it.
Oh shit. Open image.
I know. Here, I'll find a bigger, like a bigger
Well, if you
picture.
right click it and then click open image in new tab, it'll then you should be able to zoom. Hold your control button, roll up on that. Yeah.
Yeah, there we go. Okay, nice. Good one. See, this is make a great, what a tag team here. Okay, so check this out. All right. In this example, I know because I've read and sent this example 100,000 times at this point. So this stock in this example from our buddies over this optionseducation.org, it's just like, I think it's the OCC, something like that. The stock in question is trading at $60 a share. So if you bought a call like a $55 call, then you essentially bought a 10% in the money call, right? And this actually, this might work out like so much better than I could have ever asked for. Okay, when they bought this, yeah, this was like 90 delta. What percent moneyness was this thing? Okay, if IWM was at 218, so 10% of a stock that's trading at 218 is what, 20, about $22. $22 minus, yeah, 195. All right, it's about 10% in the money. Okay, so this is really good. This, I couldn't have asked for a better example with this green, um, like this little green curve right here. So just ignore the red and blue ones for right now, and let's just focus on the green one. So if you bought your call right here, you're in the money call in IWM, and the price, and you were wrong, right? So now this center of this gamma curve is coming at you. You know what I mean? Because the center of this gamma spike is always like it's essentially, it's like very, it tends to be highest right at the money or somewhere very close to the vicinity of the at the money strike. And so this peak is moving towards your strike. And that, as a call buyer, assuming that's what it was, that is exceptionally painful to hold on to because you are riding that gamma curve down the wrong direction. So like the first dollar that IWM goes down, the value of this contract goes down by $90, right? Um, because these were 90 delta at the time of purchase. But then like gamma is getting bigger as you're getting closer and closer to the as you're getting closer to like the at the money strike, as $195 is approaching the at the money level. So these losses are getting faster and faster as it's moving against you, right? Until it like hits that peak, until you get to that peak of the curve right there, and then you start riding it down the other way. And at that point, I mean, abandon hope, right? Because that has been really, really painful. But this is like how when you buy an out of the money call and the stock just rips in your favor, and the price, like, not only is the price going up very fast, but it's actually accelerating up until the contract goes in the money, right? I'm assuming everybody knows
Do
that
I
that's what happened,
do I know when
right?
I buy a contract and it instantly rips in favor? I don't think I do know.
I don't theoretically imagine a world where you buy a contract and you happen to just have nailed it and it rips right in your favor, right? The price is accelerating in your favor. Like every dollar higher the stock moves, you're making more money because gamma is making your delta bigger and bigger over time, right? Like each dollar move in your direction, everything else, all else equal, ceteris paribus, right? The gamma makes delta bigger each dollar, and so you like make more money each time. It's fantastic, right? That's when you like reach chief smart guy level. That's like you're feeling really good about that trade. When you buy an in the money call and price moves against you, you're on the opposite side of that, right? Like prices moving very aggressively against your position. The underlying stock is moving very aggressively against your position, and your calls are losing money in a non-linear way, like in a faster than um, like each dollar down that IWM goes here, this guy loses like more money than the last dollar until it's at the money, and then it goes out of the money, and then it gets less painful. But at that point, oof. Um, okay, yeah. Sorry for that side.
No, I
Sorry
think
for
it was
that.
a good tangent, and
Yeah,
and
yeah.
and it gives just more insight to how gamma affects things over time. And again, to Tawa and the others who have asked, we will be having a lot more Gex content coming out in the coming months. So don't sweat it. We'll get more out there.
Yeah, absolutely. So in a nutshell, to sum everything up before we took a stroll down option gamma lane, we we used a like we were able to use a real example, right? Real actual file download from Unusual Whales. We're able to use some tools to like filter down the data file and make it readable and usable inside Excel, which is great because um, people like if you don't work somewhat professionally in data analysis, like you probably are not going to be writing SQL query. Like you could dump this file into SQL. You could build your own little SQL database of this, of all this stuff. But then you need to know how to like select star. You need to know how to go find these things, and you need to know how to aggregate. Um, like you need to know how to aggregate your results. Uh, and I guess technically that is what we're doing with a pivot table like this, but the pivot table is just a little it's just a little easier for me because it's like visual and interactive, right? Like I didn't need to do like any sum work. I didn't need to do like any aggregation or any coding, so to speak, right? All I kind of was doing was just dragging fields in and out of like rows, filters, and and values in Excel. So if you have some experience with Excel from your perhaps from your day job, then you can use Excel pretty quick um, to like aggregate and observe things about the data. And that's not to that's not to take away from using something like SQL, using something like pandas or in Python or polars or any that the R programming language is like written around the idea of data frames like this. So there's definitely something there's lots and lots of ways to solve this problem. But if you're not from if like if you don't have a bunch of data analysis skills built up, but you do know how to use Excel reasonably well, you're familiar with the idea of a pivot table, then you can use these few steps, these few instructions to process the day's data file from Unusual Whales and poke around a little bit and see if some interesting stuff happened there.
I could definitely see. So, like just now, like you said, you can kind of dig through the flow and find these things, but I could really see. I'm excited to learn more of this, kind of manipulating those data files, getting it fine tuned to what I'm personally looking for, because I could actually see it speeding up that process after you've got a little bit of practice in doing it. Because
Yeah,
I mean, the time it took you to do that while explaining it is about how long it took me to find it in the flow in the first place. But you were also giving explanations along the way while I was sifting through shit to find the big premium. So I could definitely see this be somewhat of a streamlined process to finding what you're. I'm excited to
sure.
learn.
Yeah. And I mean, if you're trying to catch up with a big SPX trade that went off 0 day,
Yeah,
well, sorry, that ain't gonna cut it. This because this isn't available till the end of the day. But then again, if that's what you're trying to do, then you could just sit on the spot, like you could just sit on the spot gamma, spot Vanna, spot charm page for SPXW and observe what's happening there. Or you could just sit on the option chain for SPXW and scroll up and down and look for those big purple, those purple bursty ones where, you're seeing volume kind of flying in.
right.
And that could be your methodology. Um, so So, to bring it all back home here, right? We suspect that this was our 195. We suspect that this was like a round trip. It almost seems like over the weekend. Um, and we'll find out more. Now, that said, I didn't go click on that multi-leg famo. So I'm assuming you did, and it's not that Stony. I'm talking to you, man. The I'm assuming it's not like a vertical or something like that, right? This is like maybe a
It's
roll or something.
it's So here's the thing. It could be a roll. I'll switch to my screen just so I can see why.
Yeah, sure.
The reason I didn't want to dive it is the open interest and everything matches. The contracts that they were flipping from are now expired. It looks like a roll to me. The contract that it was paired with was the $190 call for 830. Also an in the money call, now expired. It seems most likely to be a roll. I could also see it being kind of an annoying diagonal spread, but it seems much more likely to be a roll. And since it looks more like a roll, I figured it was. And we do need a diagonal primer. Don't get me wrong, especially since I've actually been seeing a lot of tweets about diagonals lately, which is great. I love people learning new things, but I think that there is some unwarranted risk that can come along with diagonal spreads, and I didn't want to distract from today's data presentation on here's a diagonal spread, here's how it's used, here's how you can lose your entire account overnight with one.
Yeah. I mean, they can be great. They can absolutely be great. Look, I mean, no, like diagonal, like especially the put side, um, because you're taking advantage of that like really sharp. And I got to go the other way. There's like a really sharp, like smirk on the implied volatility curve.
Yeah.
So you're gonna sell. You're like if you're selling in front and buying the back, and you're selling a little closer to the money and buying further from the money, then you might get, you can get a put diagonal that's like 3 to 4% out of the money. Let's say 2.5 to 3.5 or 4% out of the money for like 1 week out for like less than $1. And those can go ballistic the same way buying an outright put can. They have a lot of what a mentor of mine calls delta convexity. So they grow, their deltas will grow like buying an outright put would. And it's super inexpensive, right? Like a
Yeah,
one
for
like
sure.
$1 put diagonal, 10 wide, a 10 wide $1 put diagonal in SPX can easily trade to 10, 15, 20. If stuff gets extreme, but if it overshoots your strikes, like if it blows through both of them, then you're gonna have a bad day because you were directionally right. But like the short dated contract that you sold is going to be worth more than is potentially going to be worth more than a long dated one. And you're going to be taking some losses. So
a little bit of a heat there.
Yeah, that's a very unpleasant experience, right? To be directionally correct like that, but to have this structure kind of move against you, in a very unpleasant way. You're going to lose more than the $1 debit that you paid out. But then again, your broker is going to probably protect you, because like if you have a 10 wide SPX diagonal, and you paid $1 for it, like the buying power impact, that like the margin that's going to be removed from your account is going to be $10. So it's going to be $1,000 minus the 100 you paid.
It actually might have started out as a diagonal and didn't get closed as one. I'm going to send you a link here, Dan.
Yeah. Hit me up.
The 190 call that was rolled into the 195s was initially paired with a 208 call that was short. So it looked here that they were on the 190 call long, expiring 830, and on the 208 call for 816 short.
Okay. Oh, okay. So that's like like the colloquial poor man's cover call, right?
Yeah.
Yeah.
Long diagonal
Okay.
bullish call is what the thing flagged it as, but it
Good.
does
Nice.
kind of look more like the poor man's covered call.
Yeah. I mean, that's this could have been just a gangbusters trade, right?
Yeah.
Like, I mean, I don't know what IWM. I don't want to denigrate anybody who's a small cap enthusiast. I don't know anything about them. I certainly can't like comprehend trying to know those names or know how it's going to react. I do know they're rate sensitive, which is getting into bond land, which is very difficult for me to comprehend. Even even though it's supposed to be like math guys love bonds.
I kind of leave that to the macro big brains personally.
Yeah, right. It's I can't. It's like it's like a macro. It's not a math product. It's like a macro product, and I can't, I won't. I simply can't keep up with that. Right. But but like those small cap ones, I just don't follow them that closely. But it seems like it could have been a really good could have been a really good trade, right? I mean, IWM seems like it's awesome for like covered strangles and slightly bullish strategies that revolve around selling options in both directions. So like you're long you're long 100 shares of IWM and you have a $50,000 budget for this campaign and you're just going to sell puts and sell calls, right? You have like what's called covered strangle, um, because you're okay to acquire more shares if your puts wind up in the money. You can take assignment on those, and if the call winds up in the money, then you're okay with your shares getting called away at that price because it's a strangle, so they're both out of the money. And you just run that as a campaign, right? And I'm not much of a TA like chart guy, but I do see that it like IWM goes up and it has been up and down in like a reasonable range over the last. It's got to be the last few years, right? So um, maybe you could add some color on top of that, Sony. I'm not much for it, but that's like you can do exceptionally well running like a cover strangle
I'd imagine it.
campaign.
I think it kind
Yeah.
of fought like it is small caps, but if you look at the historical trajectory, I imagine it just kind of falls in line with the other big name ETFs. Like here, I'll just go to the stock chart. This will go back a good, let's go 5 year. I mean, look at that. A little bit of a pullback in the 2020s, along with pretty much everything else with a pretty steamy comeback. I mean, generally speaking, that the age old adage, stocks go up.
Yeah.
Just looking at history, that is as a whole fairly true. Don't get me wrong, there's tons and tons and tons and tons of businesses that fail. But usually, you got a lot of big brain, big rich people that handle these ETFs, especially those that are actively managed. There's a reason they're, the main driving vehicle behind long-term investment, right? Like they're that age-old adage. I mean, just look at YM on the 10-year as well. And there's that big COVID dump in 2020, followed by an absolute fucking face ripper to the upside. It kind of falls in line the same. My TA abilities, as you know, are very much on the uh, the time frame of a max of 15 minutes.
Yeah.
when I scalp, it's on anything from the 30-second to the 3-minute, not much else beyond that. So when it comes to like long term macro trends, I'm just as in the dark. We did have one question, and I don't think it'll be a very long answer because I think it's something you somewhat answered at the very beginning about the data, importing that data. Timothy asked, why not use SQLite and import the entire CSV file, then do a select?
Oh,
And could you go ahead and show how many rows?
yeah. Oh, yeah. That's like a very good, very reasonable like way to tackle something like this. And, for some, there are people who maybe are like interested in data processing and they will have like SQLite Studio so they could do this type of thing. Um, the size of the file, that's a good question, and that's another totally reasonable way to ingest this data and to isolate out all the IWM trades. You could push this entire CSV into a SQLite 3 SQLite database, and then it could be as easy as select star from my table where underlying symbol is is equals IWM, and then you could export that like output, or do some more processing on that, just like straight up in SQL, right? People are very good at SQL. I never got too great at it. I like my know-how kind of stops around somewhere around like select star. As soon as I'm supposed to be joining stuff together, I'm like, I'm gonna do this in polars, or I'm gonna do this in pandas, because I'm not sure if it's like, I'm like gonna try and do this left join, and I think I know how to do it, but the errors I get when I attempt to do it in polars or pandas are more comprehensible to me than attempting to do it outright in SQL. Um, oh, okay. Oh, and the question. So there were 6,671,086 rows and one header in the file for today, for September 3rd, 2024.
The mother of all Excel bombs.
Yeah. I mean, Excel's not going to open it up, right? It'll just, maybe it'll work. Maybe it'll open and it'll just view the first million, but like if you did that, then it would look like someone at Unusual Whales was like trying to punk you or something. Like you only got a few hours of data in the day, right? Like if you opened it that way, it would look like you only got the first, maybe like, I don't know, the first hour or so. And there is more data. It's just past the 1 million row limit in Excel. Yeah,
Fair
but
enough.
good question. That's great. Like if you got the know-how, SQLite, like very, very easy, very smooth way to tackle something like this. And you could keep putting data into that database and look at it over time. A hint about maybe something that we'll cover in the weeks ahead, Stony. So
Yeah, I think
be ready for
all of
that.
those data videos are going to be fun. Because I mean, I like learning new stuff, but I'm not very what's the word? I think disciplined applies, but that makes it sound like I don't do my job, but I do. I swear. Whenever I start learning new things, unless it's a bad habit, it takes a while for me to fall into a new habit. And so I'm pretty excited to do these. I think it'll be a lot of fun for people to watch me struggle. I know one of the claims to fame on the Twitch channel before we moved over to YouTube were people really getting off on me having a struggle bus trying to figure stuff out. So I think it'll be a lot of fun.
Yeah.
The only other question I got was actually about a piece of flow, and it was J&J, the $175 call for November 15th. They asked if these were sold, and well, I've got the volume open here. No volume at all on the day until the very end of the day, about half an hour before close. 2,600 contracts transacted at 257 to 254 per contract. Looking at that bid-ask spread, I'm inclined to agree with you that these are likely being sold. Now, one thing I want to point out on these is right here on the largest order of almost 2,500 of those contracts, we have a bid-ask spread of 257 to 264, and the fill was 254. Now, the reason I want to point this out is because this is a point of contention that doesn't need to be across multiple flow services, across multiple flow traders, where people get all excited about a fill that happens above the ask or below the bid. One thing I want to point out with that is that it's a red herring. Okay, so I'm going to just go to an article that we wrote on Unusual Whales a couple years ago about why we don't carry a below bid or above ask filter like a lot of other companies may or may not do. It's because it's technically not possible to fill an order outside that national best bid and offer. It can happen from, bad reporting from exchanges. It can happen as a time thing where there's literally a 1 millionth of a second between a bid ask shift and the fill hitting. But technically you can't fill an order that's better or worse than the best bid and the best ask. And that's why we don't carry a filter for that. So anytime I see orders like this where the fill is outside of the bid and ask, whatever side it's outside of, I think of it as at bid, at ask. So in this case, the bid was 257. They filled at 254. My brain instantly, now that I have that knowledge, that we learned that a few years ago directly, it's an assumption we've had, but we got direct confirmation of that through outreach. I just regard that as a perfect at bid fill. If it was at, like, let's say we're at, 257, 264, and they fill at 259, that's still bid adjacent, but it's going to fall a little closer to the mid for me, and I might speculate a little further whether or not they are sold to open. In this case, 254 on a 257 bid, in my brain, perfect bid fill. There's no real open interest comparatively. We know this one trade alone is bigger than the open interest. The trade was a size of 24.79. The open interest was only 22.24. In and of itself, we know this is a new transaction. Based on how it filled, I agree with you. This does look to be a call right. And I don't see any related multi-trades. And when I was digging through Flow, I didn't see anything of similar sizing or premium. So I think this is just either a naked short on the contracts or covered calls for shares that they're holding. But I just wanted to touch on that a little bit since I saw that outside of bid ask fill.
Yeah, that's a good one. And if you go look at it, I mean, I'm sure you did. I'm like looking at my phone trying to see what's what. Like if you look leading up to that trade, right, in the, microseconds leading up to that floor executed, the floor executed one, right? So that means like a broker took it down to a floor
Right.
trader and had it executed right there. There was like these sweeps that happened before. Guess where those sweeps went off, right? Right on the bid,
at it.
Yeah, right, exactly. So
And I do remember, I don't know if anything ever came of it. I remember years ago now, we were looking into whether there was any edge from Flow that hit as floor turning sweeps to floor. And I don't think there was. But it is still nice to see because we've got that big order with a bunch of similar or identical trades of smaller size that were sweeps. And in sweeps, you can actually just hover over and it'll tell you the definition of it. But essentially, it's multiple placed orders trying to take advantage of that bid ask, trying to get the best fill possible. Sometimes they'll even be tiered. And even that just kind of lends a little bit more credence to what I was saying about not being able to fill outside of the NBBO. They've got orders sitting there waiting, right? They want them to get filled at the best price possible, so they sweep them in to try to get those fills. And you can even see that we have even a little bit of an ascending fill on these. A lot of times ascending fills on repeat hits can indicate possible chasing of the contract price, but we're not really seeing that here. It just seems here they're getting the best fill that was available at the time. So I still would definitely lean toward these being sold to open. And J&J surprisingly wasn't red today with the rest of the market.
It's defensive, bro. XLV.
Hey, that's fair. That's
XLV.
fair.
It's defensive. And I like what you said about sweeps too. And if you click the exchange column on in your flow screen, you could literally see the personification, the implementation of a sweep order, right? Like the CBOE EDGX, that option exchange is where the first five went up, is like the first five that are listed right there. There were 5 resting orders to sell at 257. So this sweep, like swept those off of the top of the order book. Then the next row up is the ARCA, like the New York Stock Exchange ARCA option exchange. And there was only one sitting there. So like that sweep order took that one off the top of the book. Like if you keep going up, you can see each one of those executed on a different exchange. Yep. That's what a sweep order means, right? It's like it is like an urgency expression, because you're you're like taking the available contracts. Or you're either you're buying or you're selling what's available across many exchanges all at one time. You're like sweeping the order book. And by
On
order
it, so
book, I
you will
mean,
take what
yeah,
you can get.
yeah, right, exactly. Yeah, you're selling, you're buying, what have you.
But the retail
But
equivalent, I
yeah,
think, would be like you see something you really love, whether you're a chartist or just a flow trader. You see something you love it. I know Dan can attest. I'm always like I'm gonna wait till end of day and see what happens, but I always jump on it anyway right away. It's kind of like when you see something you really want, so you just spam that market buy button.
yeah,
It's kind of like that, but not as degenerate, and usually with a shit ton more money involved.
yeah, right, exactly. You're probably trading some size if you're taking. I mean, I don't know, this one looks like it was relatively thin. I mean, there were only like 20 something,
Yeah,
um 20 something sell, assuming 20 something sell orders across 1 2 3 4 5 6, across 6 different exchanges. So
not
it wasn't
massive.
necessarily a deep,
It,
yeah, it wasn't a
but
deep market. But then he didn't get this trader, this desk didn't probably didn't care anyway, right? Because the vast majority was going off with
with that
his or
floor
her,
trade.
that desk with the floor,
And
yeah,
not
through
only
their
that,
broker. Yeah.
those are of all of the orders involved in these sweeps, that large floor also happened to be the best order. Look at the spot price on that compared to the rest. So they got their size a little bit I
Yeah.
guess that's not as nice. If it were an ass side set of sweep, but I'm sure they would have wished them.
We'll find out in due time, right?
Absolutely. I'll
Yeah.
definitely follow up on this one.
Yeah,
Um
that's a good catch.
But other than that, folks, I hope you guys enjoyed the data primer. I definitely did. I'm looking forward to learning it and looking like an idiot while Dan teaches it to me live for you all to see me struggle on. Next week, Dan will be on hiatus for a week, and we will have your boy Milt on here for a Classic Stony and Milt Shenanigans stream. On that one, we'll be doing a lot of flow reads and a lot of charting. So if you have just general flow questions, as always on any of these streams, if you have questions, bring them. We'll hit them at the end. Even if they're not related to the topic, we'll be happy to hit them at the end. Next Tuesday, we're going strictly flows, strictly charts. So if you see anything going into next Tuesday, bring it. We'll hit it. And then we'll have Dan back for, I think. So let's give him a little heads up. A week from the 9th, are you thinking you want to jump, balls deep right into calendar spreads, or do you want to kind of lead into those?
I kind of I do want to do I want to knock out a few weeks of that presentation. Um I would very much like to tackle that. But as you know, there's like a few parts of that I want to make sure are in place to help
Oh yeah, for sure.
make it as clear and as actionable as possible. Not to mention this sort of stuff right here, right, is what I was working on today. As you could see, this is me asking ChatGPT to help me with my like Black-Scholes option calculations, right? Because I want to make sure that I have lots of great supporting material for this, and that I'm able to put together a useful and interesting and like as deep as you want to go type of presentation on calendar spreads, because they're interesting and they're unique, and they don't really get a lot of coverage from like other play. There's not. I don't think there's a big presentation on them from like Tasty Trade or anything like that.
Yeah,
And
I
so
haven't
hopefully you
I
can.
haven't seen any when I was looking into them because I
Yeah,
just see like Dan and another guy, a scalping mentor of mine, Nate, just punting calendars and doing a little dance emoji celebration afternoon calendars just going. And so it's definitely a really interesting topic. And
yeah.
if we don't start that the next week, definitely be on the lookout for more of that data stuff. We'll make standalone videos and the live suffering of me. But other than that, folks, I hope you have a great rest of your evening and week. And I hope you guys enjoy these presentations because I definitely
Thanks so much, y'all. Appreciate it.
take care, everybody.